This is Satya Pradhuman of Cirrus Research. The latest model behavior takes a closer look at the value cycles and, in fact, looking at it in a case study fashion over time. In fact, the report looks at over the value runs of the last 30 years. And what you'll see is that the 2000 event was the lengthiest of what we have seen and probably the most powerful. This was the post-internet sell-off, which led into also a cyclical run. When you take a sort of like a look at this current market environment, it's noteworthy that our style oscillator has now begun to trigger a value overweight. In fact, this overweight that we're witnessing currently, the last time we saw this was back in the 2000 era, where the signal went to a value overweight. And it so happens that it coincides with the last most lengthy value run. And the question is, what's going on here? And there are a couple of things that seem to link this together. So the report delves into a number of variables. This is a great example of the yield curve comparison. The idea is that if you have a yield curve that's inverted to slow to low, and it's likely to climb further, meaning that the long end is sort of climbing higher, it's relating faster growth. In other words, the real economy is starting to recover and grow. And to some extent, that's exactly where we're lined up for. So if you look at the 2000 event, in fact, the shaded area represents the value run from 2000 to 2002, roughly. And what's interesting is that the solid line represents the yield curve over that period. This current marker here tells us where we are today. So we're in a very similar range where that triggered. So the report looks at a number of variables like profit cycles, credit quality, etc. At the heart of this, though, there are a lot of things that seem to be aligning. Outside of sort of macro factors, think of sectors. Another interesting observation is the trade-off between technology and industrials. We witnessed a sharp break in technology with the sell-off of the internet group. But what we also saw was both in the large and small cap arenas, in both instances, we saw industrials lead over the subsequent years as technology broke down and sort of became dead money. It is super interesting that in this current period, the last 2 or 3 years, the industrial sectors have really led as the technology sectors have lagged. So take a look at the full report, and as always, happy to take your questions. Thank you.